national currencies, but instead should permit the emission of international liquidity, such as SDRs, to create a more stable global system, financial system. SDRs are special drawing rights. They're issued by the IMF, which they derive their value apparently from a basket of commodities, or excuse me, basket of currencies. So it's just paper backed by nothing. The UN report went on to say that the IMF should be given authority to print its own fiat currency. Oh, excuse me. Robert Mundell, a Columbia economics professor who has developed many plans for a new world currency and system, said that the next big crisis might be the occasion for a reconvening of Bretton Woods-type conference to establish the conditions for a new international monetary system. So time is running out, folks, and there's no doubt in my mind that a new monetary system is coming, and after talking with many of you in the audience, it seems like you feel something's on the horizon as well. But the last thing we want to do is give up our control over our money to some global institution that is run by the elites of the world. We do not want to go down that road. Remember the quote from earlier, who controls the money controls the world? We don't want to give that up. Even if they give gold a role in the system, it would only be short-lived, just basically in order to dupe us into accepting it. So I strongly urge you to not fall for something like that. And the fact is that the power elites of this world realize that having a gold-backed monetary system is key to ensuring the freedom and liberties of people of this world. Whereas having a fiat political money, they are able to control the people. Former Fed Chairman Alan Greenspan knows this all too well and actually advocated a return to sound money. Of course, this was before he became the most inflationary Fed chairman ever, obviously with the exception of Ben Bernanke. But I'd like to read a piece from his essay entitled Gold and Economic Freedom, which he wrote back in 1966. Greenspan says, the opposition to the gold standard in any form from a growing number of welfare state advocates was prompted by a much subtler insight, the realization that the gold standard is incompatible with chronic deficit spending, the hallmark of the welfare state. Stripped of its academic jargon, the welfare state is nothing more than a mechanism by which government confiscates the wealth of the productive members of the society to support a wide variety of welfare schemes. A substantial part of the confiscation is effected by taxation. The welfare statists were quick to recognize that if they wished to retain political power, the amount of taxation had to be limited, and they had to resort to programs of massive deficit spending, i.e. they had to borrow money by issuing government bonds to finance welfare expenditures on a large scale. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. If there were, the government would have to make its holdings illegal, as was done in the case of gold. If everyone decided, for example, to convert all of his bank deposits to silver or copper or any other good, and thereafter declined to accept checks as payment for goods, bank deposits would lose their purchasing power, and government-created bank credit would be worthless as a claim on goods. The financial policy of the welfare state requires that there be no way for the owners of wealth to protect themselves. This is the shabby secret of the welfare status tirades against gold. Deficit spending is simply a scheme for the confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights. If one grasps this, one has no difficulty understanding the status antagonism toward the gold standard. And it's strange how he had such a change of heart, isn't it? You know, I guess power corrupts absolutely. Remember? But all is not lost here, folks. The U.S. does hold an ace up its sleeve. As you can see by looking at this chart, the U.S. is a gold superpower. We own more than double the amount of gold compared to Germany, who is the second largest holder of gold. You can see we also have about 8 times the amount of gold as China does. And China may have the largest reserves in the world, but it's basically all on paper, money that's losing its place in this world. And of course, the Chinese know this. That's why they've been increasing their gold reserves like crazy. And I'd be willing to bet a lot of money that the number you see on this chart is wrong. I'm sure China's probably been hoarding as much gold as possible, and they're not going to report those numbers because they don't want to. And you have to also understand that China has now become the #1 producer of gold and silver in the world. And last year, they increased their imports of gold and silver by over 5 times their amount the year before. So the Chinese are seeing gold for what it is. It's a safe store of value amidst shaky paper money. So if we were to remonetize gold and bring it back into the system, how would we do it? Well, there's a few ways it could be done. I'll give you a very brief analysis of how I believe it could be done. The first thing we would need to be determined is how much actual money is in the system. Right now, there are so many different ways of calculating the money supply. You have monetary base, you have M1, M2, M3, MZM, and all of these represent different ways of calculating the total amount of money in the system. But to keep this simple, let's just look at the monetary base for a moment. As you can see, the monetary base has nearly tripled since the crisis in '08, and will only be getting worse, especially with QE2 now underway, and I'm sure there will be QE3 and QE4. But if we use a nice round number of $2 trillion, we can use that number as the basis for our calculation. So if we take $2 trillion and divide it by our total stock of gold, we get a number of roughly $7,600. Therefore, $1 would equal 1/7,600th of a gold ounce. And I know that seems extreme, but I mean, it just is what it is. And so when you hear various economists and financial analysts talk about potentially gold going to $5,000 or $10,000, they're not really just making these numbers up. There is usually a reason behind their predictions. Now, this number also assumes that for each dollar out there, it's backed 100% by gold. I would argue that a 100% reserve system is the only system that would ensure the integrity and stability of our money. Many will argue that it's foolish to have 100% reserves because most people aren't going to be redeeming their money at the same time at the bank. Therefore, the bank should only have to keep a fraction of that amount and be able to loan out the rest of the money. But I would argue that this is fraud. And though fractional reserve banking runs wild right now in our current system, it doesn't mean it's right or just. And fractional reserve banking is definitely the root as well of many of our problems. Allowing the banks to essentially create money out of thin air is a system that is open to abuse and crisis, which is evident when looking at our current predicament. And I say that the system can be changed for the better. There's obviously a lot more to this debate, and it is one that needs a lot more discussion, especially by people who are a lot smarter than myself. But do not be fooled into thinking that the system we have in place is the only option we have, because it's not. So I encourage all of you to take this matter very seriously and decide for yourself what you believe to be right. And finally, I'm just going to end with a quote. And this was said by former Secretary of State Daniel Webster. A disordered currency is one of the greatest political evils. A sound currency is an essential and indispensable security for the fruits of industry and honest enterprise. Every man of property or industry, every man who desires to preserve what he honestly possesses or to obtain what he can honestly earn, has a direct interest in maintaining a safe circulating medium. Such a medium shall be a real and substantial representative of property, not liable to vibrate with opinions, not subject to be blown up or blown down by the breath of speculation, but made stable and secure by its immediate relation to that which the whole world regards as permanent value. And thanks for coming tonight. And again, I hope you got something out of this. Thank you.